Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, we just got a question from a listener in Vaughan, Ontario, who asked, could Ross comment on CMHC's claim housing starts jumped 16% in July?
It's nonstop, isn't it, Jim? It's really nonstop. Every single week we get this. And I feel so bad for the listeners. I feel so bad. You are inundated with these housing market talking point interpretations of the market. And then they're asking you to use that information to go make the biggest buying decision of your life. They're asking you to go out and buy something that you're going to spend the highest share of your income on over the next 25 to 30 years, or possibly your lifetime. It continues to demystify me. So how we see housing starts are totally different to how CMHC and their economists view housing starts. But that's because we have worked in the industry. We have worked with builders. We have studied builders. We have studied the interaction between the resale housing market and the new home housing market for decades. We have not taken opinion that was taught to us from somebody else and then gone on to believe that to be true, and then arrogantly, in our viewpoint, arrogantly, because unless you're 100% sure of something, just because you think you're right doesn't qualify you to talk to the public. So when we hear a comment like this listener has communicated, based on reading of what CMHC released today, it's frustrating for us, because these are the things that create false narratives that are acted upon by the public, that result in policy changes from the government. Because what your listeners, I hope, understand is politicians are in the dark about housing markets and housing analysis in the same way that the general public is. So how do we see housing start data versus how CMHC presented that information to the public today? Because they did say there was a 16% rise in the public. Now, when the public hears that, this reinforces the narrative that real estate boards and local real estate agents and lenders have been spouting off in the local marketplace for the last couple of weeks. Oh, it's amazing. The pandemic has not slowed things down. Things are rapidly getting back to where they are. It is a falsehood. It is a deception. The data does not back it. Now, how do I know this? When we read CMHC data or StatsCan data, we read it from the standing of a housing market. So we know that the acquisition rate fell in 2017 in the new home sector, which resulted in now 3 years of declining starts in the housing market. Now, when I'm talking from that perspective, I'm talking from this. You see, CMHC economists are speaking to starts as it impacts gross domestic product, GDP, how it impacts tax revenue for your municipal government, your federal government, and your provincial government. That's what the economists at CMHC are speaking to. They don't realize that their talking points for government get misconstrued by the general public, who is inundated with false narratives from organized real estate and lenders, the stakeholders involved in the sales market, and they just hear what CMHC is saying, and it becomes a self-fulfilling prophecy. If instead they were told that starts today are 20,000 or 25,000 fewer new homeownership homes are being built today than were being built in 2017. It destroys the narrative that's out there. If you heard, as a consumer, that new home starts have been declining from the fourth quarter of 2017 through till July of 2020, you would say, wait a second, if that's true, then how is organized real estate claiming prices have gone up? How is organized real estate claiming a record number of sales in some municipalities in July? If the new home market has been declining since the fourth quarter of 2017, how come the resale market is done the opposite? And we would say, because of how we see it, they haven't. They move in tandem. So we would say that right now, year over year, new starts are about 95% of what they were a year before. It has been a long and continual decline since 2017, which was predicated on a change in the mortgage lending infrastructure mandated by the OSFI in the fall of 2016. So this is what I hope your listener takes from this, because this is how we see it, and we come on this show to hope we can ask your listeners to dive deeper into the information and try to see things the way that we see them. It only makes common sense that if the OSFI mandates home buyers can spend less money, they're going to spend less money. If the OSFI takes an unprecedented act, an act that has never before been taken by anyone in the lending environment, a mortgage lending environment in Canada, to basically cut the feet out from under home buyers, it only makes common sense there's going to be fewer sales. It doesn't make sense that they would enact these rules and magically out of the woodwork, only wealthy home buyers would be jumping out to buy homes. No, what it means is that the gradual erosion of the share of sales that goes to first-time buyers, that is a consequence of the mortgage lending rule change, causes those buyers' share of the market to decline. We see that in the housing start data that gets released 1 and 2 years later, where we see these sales falling. Organized real estate wants you to believe, and they inundate you with its information. Everything's good. Everything's rosy. Go and buy a house. If you don't buy a house today, it's going to be worth more tomorrow. Well, you know something, folks? For 70 years, organized real estate has followed this practice of informing the public that if they don't act today, they're going to lose money tomorrow. It's because organized real estate, who educated your grandparents, your parents, your peers, every economist in Canada, every politician in Canada. Like, let's face it, folks, politicians are no different than you. They may buy 3, 4, 5 homes over their lifetime. They're only going to see the real estate market up close those 4 or 5 times. If you're trading every 12 years, it is a radically different set of rules that you're trading under each of those 12, after every 12 years. So politicians are just as clueless. Politicians believe organized real estate, but you have to understand, for the first 70 years that organized real estate existed in Canada, it was illegal to represent buyers. Realtors were legally obligated to get the sellers of real estate the highest price possible. Proof, Ross. Where is your proof, Ross, that this exists? Well, my proof is right before your nose, and it's on Realtor.ca. There has never been, and there cannot be, a price reduction noted on Realtor.ca. The only price you see on Realtor.ca is its current listing price. You never see what its previous listing price was. And you must ask, why? If there are 500,000 homes sold in Canada, that means there are 500,000 buyers or families of buyers. Why are those 500,000 families of buyers not given access on Realtor.ca to what the home was previously listed for sale for? Because here's how it works, folks. Last year in Canada, on average, there were 264,000 listings on Realtor.ca each month. 264,000. On average, there were only 40,000 homes purchased each month. That means, think about it. There were 6 times as many homes for sale on Realtor.ca in a month than actually sold. 6 times. What that means is, the homes that you saw for sale in June, 85% of those homes could be purchased for the same price or less in July. 85%. On average. I'm just going to use the averages to make the math easy for you, so I'm not trying to fool the listeners. The month after that, for the sake of the argument this year in August, 70% of the homes that were for sale in June can be purchased for the same price or less than what they would have cost you in June. But organized real estate tells you house prices went up. How can house prices go up when I can still go out 2 months later and buy 70% of the homes that were on Realtor.ca in June for the same price or less this month? This is how CMHC has gotten fooled for decades by organized real estate. Because the economists who work at CMHC buy houses themselves. They believe the talking points. They are inundated over and over and over again, generally speaking, at least once a day, from everyone telling them what organized real estate tells you is true. When it's not. It is a falsehood rooted in 70 years of seller beneficial real estate stats. The reason why we know, so what I'm saying to your listener on this question is this: how we see it, and we see it as it really happens. Home sales are dropping year over year at about, are only 95% of what they were at a year ago. That's what you need to understand from the CMHC data release today. You have to understand also that this is a latent metric. So in other words, even though they're posting a number for July today, those homes were actually purchased 2 to 3 years ago. So you're actually only measuring the market now from 2018 in the new homes housing sector. But CMHC expresses it to you today as if this is what's happening in real time. It's not, because we read it differently. It's not our responsibility to teach CMHC staff how to read housing market data. It's their responsibility to call us and ask them, why are you saying this? We read data totally different than they do. No, new home starts fell in July. They fell in comparison to June. They fell in comparison to year over year. That's how we see it. How we see it has been right for 40 years.
We'll have more with Ross Kay right after this.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking to Ross Kay. Ross, late last week, a listener in Oakville, Ontario asked, why is Ross claiming house prices didn't change in Oakville in July, but our local realtors are claiming a huge gain took place?
Well, Oakville, as you know, is right next door to my hometown of Burlington here, Jim. So, this question is coming from the hot spot of real estate intelligence from across North America. This is the only market in North America where 8 different real estate boards are actively fighting for business. This is the only market. Now, when you go out to Vancouver and British Columbia, the realtors, the houses that are listed in Vancouver appear on the Real Estate Board of Greater Vancouver. They do not appear on the Fraser Valley Real Estate Board. The agents have access to the data, but the listings are not posted. The stats are not commingled. The stats are kept separate. Now, I will tell you, this creates a huge problem for anyone trying to analyze the Greater Vancouver market. Because if you don't know what to look for across the Fraser Valley Real Estate Board and the Vancouver Real Estate Board, and if you don't have the ability to commingle their numbers, you are always going to make fraudulent statements about the housing market, okay? It is a super, super high degree of knowledge that you have to be able to understand what's happening in Vancouver, because if you're a Vancouver realtor, you're using the Vancouver Real Estate Board of Greater Vancouver MLS stats, when you really need to be using Fraser Valley Real Estate stats and Vancouver Real Estate stats to be able to interpret the changes that are taking place in Metro Vancouver for the sake of the art. In Oakville, this is how, Jim, I would normally start this conversation. 1, what real estate board are you claiming? Because I'll tell you this. The Toronto Regional Real Estate Board publishes a selling price, average selling price, in July for Oakville. The Oakville-Milton District Real Estate Board will publish a average selling price for Oakville. The Realtors Association of Hamilton-Burlington will publish an average selling price for Oakville. And those 3 real estate boards, who are all actively working and listing properties in the Oakville, the city of Oakville, will have 3 totally different prices. 3 totally different prices. So when you're asking me this question, I would first say, well, what real estate board are you talking about? And then the listener would probably have to go see it. Now, how do we see it? Well, we see it totally different because we look at the Toronto Real Estate Board sales data. We look at the Oakville-Milton District sales data. We look at the Realtors Association of Hamilton-Burlington sales data. And we look at the data from any real estate board who had a listing in Oakville during the month of July. And from that, we have a starting point. We take that and then we break it down into a granular level. In other words, we look at municipalities at a forward sortation area breakdown. So even when we're counseling buyers and sellers, our platforms, people that are in our programs, they have breakdowns based on FSAs. So, in other words, generally speaking, if someone wants to buy a house, they want to buy a house within a certain neighborhood, a certain forward sortation postal code area, and even a certain school. So, because buyers are really that specific, you really need to be delivering information to them. And when you break the information down, Jim, to a granular level at the FSA, you will see there is 0 change between June and July. 0. So I don't care what real estate board you're getting your information from, listener, whether it's Toronto, Oakville-Milton, or Hamilton-Burlington. The aggregate data at the FSA level records no change. When you zoom in to a neighborhood and you look at the same quality of house from last year to this year in the city of Oakville, you are not going to see housing prices went up. You'll see that housing prices went down. Just the opposite of what those 3 real estate boards will tell you. But you don't have that perspective. You don't have that ability as a home buyer. Because what you have is Realtor.ca. Realtor.ca has the listings that are for sale. And that's all you ever think about. You don't think about the houses that sold, the houses that were purchased. The houses that were purchased last month, the month before, the year before. That's what you're not looking at because they're not on Realtor.ca. And that's by the design. You see, Realtor.ca is designed to perpetuate the myth that housing prices are increasing, that houses are worth more than what they really are. How do they do this? They do this by not having price reductions appearing. Now, this is because for 70 years, organized real estate, every member of organized real estate, every realtor in Canada could only work for for sellers. It's only been recently, since the Great Recession, that buyers have even started to get, a minuscule amount of attention from realtors. And the amount of attention they get is so small, it's really irrelevant, which is indicative of a simple look at Realtor.ca. Where are all the price reductions that took place this week, yesterday? How come they're not appearing on Realtor.ca? Well, because they want you to be exposed to overpriced listings. Because by being exposed to overpriced listings, when you stumble upon a listing that seems to be a good value, you buy it. This is how the fear of missing out phenomenon works. So, Ross, why are they claiming house prices went up when you're claiming that they didn't? Well, because how we see it is, we look at the forward rotation level breakdown of sales over the last month, 3 months, year, and we see if there's any house price change. We know there is none. We can't find it. Well, Ross, isn't that what Standard National Bank house price index is based on? They supposedly use FSA. Yes, but they use a double sale. In other words, if a home sold in June of 2020, the last sale they have for it is probably for 10 to 12 years ago. And they look at the difference in price, they average that, and that's how they come up with the house price change in June. Because they take an aggregate in that FFA. Well, what they're actually doing is this. They're looking at what homes buyers are buying in a month, which is always the highest quality of home, and they're not taking into consideration the 85% of homes that are offered for sale that don't sell. Why? Why is the public not given access to this information? What I'm saying, anyone with a computer can go and verify themselves, meaning any member of the Canadian Real Estate Association has the ability to verify that there were 264,000 residential listings on Realtor.ca hosted in 2019 on average in any given month. Why do you not see that published anywhere? This is an inarguable fact. We're tracking them. We're tracking those because we had to track them when real estate data was paper, where it was printed out on a dot matrix printer with before Excel was even created. Well, certainly before I was readily used. This is how you come to understand how real estate boards work. You have been misled. It's as simple as that. There has been no house price change in Oakville. That's how we see it. You can believe whoever you want.
We'll have more from Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Ross Kay. Ross, a listener in Edmonton, has asked, why are prices in Alberta, and specifically Edmonton, not being impacted by COVID like Canada's other major cities are?
They're being impacted exactly the same. So that's how we see it, okay? They're being impacted exactly the same. What's different is, where is Edmonton in its trading cycle? Where the difference between Vancouver and Toronto is, where is Vancouver and where is Toronto in their trading cycle? Now, I will say, generally speaking, trading cycles are a provincial number, but a provincial measure. But in this question specifically, he mentioned Edmonton. So this is what's happening in Edmonton. Why you're not seeing any price change, any growth, when Vancouver and more specifically the Greater Toronto area is claiming to be recording house price change in the middle of a pandemic. Come on, folks. Hopefully that sounds as absurd to you as it does to me. There are almost 2 million Canadians that were unemployed. There are 1.5 million on CERB, but the housing market is as busy as it was. Just had a record in July in Toronto. They really want you to believe that. They want you to believe something that is so absurd, and that really answers the question. They believe you're going to believe it because you have in the past. Organized real estate has fed your grandparents, your parents, your peers, your friends, the economists that you read in the newspaper, mortgage brokers, politicians that you elect. They have had all of that group of people believe every single thing that they've told you about housing markets for the last 70 years. They have had you believe it. What Edmonton is different than Toronto is, because of where it is in its trading cycle, is fear of buying in is taking place. So fear of missing out is what's being blamed in Toronto. It's fear of buying in that is being recorded in Edmonton. FOBI, or fear of buying in, is what happens when first-time buyers are afraid to buy in a market, and they have left the market. They've left the market long enough for the sales chain to have been fulfilled. The sales chain in Toronto was still ongoing, even though FOBI has already taken place with first-time buyers. That's indicative in Toronto because that's how the Toronto Real Estate Board was claiming house prices had jumped in June and July, because first-time buyers had exited the market. In Edmonton, that leaving of the market had taken place long ago. And now you're sitting with what we call a stagnant market, where one first-time buyer triggers a series of sales, but the first share of sales to first-time buyers is not changing. It's remaining basically flat. You're going to have minor variances in how your real estate board reports their numbers because of the way the calendar years never line up in terms of reporting days and trading days. But generally speaking, over the long haul, there is no movement in the share of sale, which creates no opportunity for price. So what you're seeing in Edmonton is the conclusion of FOBI. So fear of buying in. First-time buyers are afraid to buy into the market. It took them about 2 years to reach that point. In Toronto, fear of buying in actually took place in April. Okay, and it's way more rapid in terms of the way the Toronto housing market was functioning versus the Edmonton housing market. That's how you had these house price claims. In Toronto, they claimed housing prices jumped $137,000 year over. Step back, folks. Step back and think about it. Whose income anywhere in Canada went up enough to afford $137,000 on average more for a home? They could spend more. It didn't happen. When you go back into the neighborhoods at a forward sortation level breakdown, in other words, I'm going into a neighborhood and I'm going to see what the houses have sold for. The same house has sold for in that neighborhood over the last year. I'm not going to see any house price change because house prices don't go up and house prices don't go down in a month to 3 months. Obviously, in 2019, if I could buy 70% of the homes that were for sale in June, in August, for the same price or less, I don't care what you tell me about the 30% of the homes that you claim had an increase in price. Because 70% of the stock on Realtor.ca could be had for the same price or less than it was 2 months ago. The reason why prices are different than Edmonton, and they're like the price movement is different in Edmonton than it is in Vancouver, than it is in Toronto, even than it is in Calgary to a certain degree, or Montreal. The reason why it's different is those places are all at different stages in their trading cycle. And since trading cycles are solely responsible for 100% of the house price gain or decreases ever recorded in a housing market, that's why they are all moving in the exact same way because of COVID. You are simply at a different stage in your trading cycle than you are in Toronto, Vancouver, or Montreal. That's why if you listen to organized real estate, if you listen to the drum, constantly drumming, drum higher prices, fear of missing out, focus on the sales, focus on the sales. The best thing for me as a realtor when I was selling shit, the very best tool I ever had was when I had a brand new listing listed by someone else who was still not in the MLS. And I knew my buyers would be a buyer for that home, or at least that they're in the price range that home was listed for. Because I could get them in the back of my vehicle, and I could drive them to that property. And while they're asking me, well, Ross, what is that house? This house, I would refuse to tell them. I would say, look, there's no feature sheet. There's no asking. You don't know what the asking price is. You can't find it on any MLS search. You can't get the information from anybody else, obviously, because you're working with me. Wink, wink, nudge, nudge, which they would laugh at. And I said, what I want to do is take you through this home, and I want you to tell me what this home is worth. Now, you've got to remember, I'm doing this with people who have become educated by me going through a dozen or more other homes. Okay? These were buyers who were skilled in the market at that moment in time. Because I wasn't trying to sell them a house. I was trying to allow them to find a house that was right for them. The buyers would go through that house, and after the showing was over, I would say, okay, what do you think this home should be asking? You've got to remember, these buyers had been given lots of information from me about sales, listings, expired. They have viewed personally with me at least a dozen homes, and now they're arriving at a price as an educated buyer, and they would deliver a price to me. Almost always, my buyers were bang on. The buyers, by not knowing the asking price of the house, they knew what that house was really worth. After they told me the price, I would then turn tell them what the house was listed for. I never once had this circumstance occur where the listing price was less than what my buyer told me the house was worth. The listing prices were always substantially higher than what my buyer's opinion of value was without having any advance notice of what that house was listed for. The buyers actually knew more because they knew less. If you spend your days on Realtor.ca looking at houses over and over again, looking at what's for sale, you have tunnel vision. Tunnel vision created by Realtor.ca and organized real estate. You are looking at what they want you to look at. They want you to look at Realtor.ca 24/7. They want you to have anxiety inside of you. They want to create fear of missing out. They do that through the sales stats by not telling you all of the details about a housing market in a month. They're manipulating. They're focusing you to stare down a piece of pipe at a target when instead you should be taking that piece of pipe away, the tunnel away, and you should be looking at everything. It's no different in Edmonton than it is in Calgary, that it is in Vancouver, that it is in Abbotsford, that it is in Saskatchewan, that it is in Regina, that it is in Windsor, that it is in Toronto, that it is in my hometown of Burlington, that it is in Montreal or Quebec or St. John. It's the same all over, folks. Organized real estate has spent 7 decades forcing you to have tunnel vision. Unless you have an opportunity to step back and see everything for what it really is, you will continue to be misled and you will continue to lose massive amounts of money. Massive. More money than you'll probably earn in a couple of years.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.